Hey guys, what's up? Alec back with the daily stock market, and look at that. We have NEO was up 8% on Friday. Enphase Energy, Coinbase all up 5% or more. We had other China stocks like Alibaba up 4%. But in this video, we're going to talk about some of the most popular stocks that you guys have been begging me to talk about, like Apple, Meta platforms, and Netflix, and much more. So make sure you stay throughout the entire video so you don't miss out on any updates on the most popular stocks. Before we dive in, just hit that subscribe button on YouTube with post notifications on and share this video with a friend. And without any further ado, let's jump right into it. So the first one up is Meta platforms at $123 per share, up 39% in the past month. This is a great swing trade opportunity anytime we see Meta platforms under $100 per share, closer to that $95 mark. And we've even seen them at $88 per share in the past. That wasn't long ago either, November 3rd, just a month ago. So there's definitely a possibility that we'll see Meta platforms revisiting that $95 mark once again. Personally, I have price alerts set if this price target moves below $99 per share. But in my opinion, the best part about buying Meta platforms under $100 per share, there's easy swing trade potential around 30 to 40% gains. Okay, so even if you buy at $95 per share and you sell at $125 per share, you're looking at around 30% swing trade growth and even more if you're playing an option. We're going to do a little bit more of a rapid fire instead of a deep dive so we can move on to the next stock and talk about as many stocks as possible in this video. So just to rattle off some quick facts, we have the PE ratio at 11, which is the lowest PE ratio out of any of the big tech stocks, implying that Facebook is one of the best deals in the stock market for big tech stocks, even at $123 per share. Long-term investors probably are still dollar cost averaging into Meta at this point. The market cap is $300 billion. We can see a 3x on Meta in the next 5 years, 3 to 5 years, in my opinion. Personally, I am still dollar cost averaging in for long term, but I'm going to be buying the heaviest under $100 per share. The PB ratio is 2.6, the PS ratio 2.8, implying it is a great deal. Forward PE is 13, EPS is 10. Okay, but if we scroll down, we can see the quarter over quarter, they are losing on EPS a little bit. We've seen their EPS go from around $4 per share. Now it's under $2 per share. So it's definitely trending the wrong way. We can also see on the quarterly, their net income is trending the wrong way, from $9.1 billion in one quarter in net income down to $4.4 billion. However, if we look at the annual growth on net income, we see it's $18 billion in 2017, yet we see a huge growth from 2017 to 2021. Now we're seeing closer to $40 billion in net income. Okay, so over a 2x on their net income, yet the stock price is lower than it was in 2018, 2017, which is definitely an interesting thing to think about. If we pull out to total revenue, we can see in 2017, the revenue was about 3 times lower, only $40 billion on total revenue. Now it's closer to $117 billion. And again, the stock price is lower than it was in 2017. So the company has seen extreme growth on total revenue and net income, which is very rare to see for a stock that is down so much on the year. If we scroll down, they also have one of the best balance sheets in the stock market, only a 24% debt to asset ratio. So many assets, so little liabilities, very, very low risk of Meta platforms, Facebook, Instagram going out of business anytime soon. So that's why I believe in the stock for long term. Great growth. I think the growth can continue to trend in the right direction. On net income, we've seen it go down, so we really want to see quarter over quarter growth for net income moving forward, and we also want to see that debt to asset ratio staying under 50% for Meta. Okay, but what about Netflix? They're at $319 per share, up 12% in the last week, up 17% in the past month. But if we pull out to the 3-month chart, this is when Netflix gets very interesting because they're up 41%. So just like Facebook or Meta, they've been having a rally the last few months. Now, if we pull out to their all-time low in June 14th, which was around $167 per share, we can see that the stock has grown 90% since then. Okay, so my personal opinion, I like to buy Netflix under $205 per share. So the stock has to fall quite tremendously still. If we're looking at recent supports and resistances, we can see it's closer to $225 per share. So the bad thing about Robinhood is they never had price alerts. They just introduced price alerts, and they only let you set one price alert per stock. So for example, I can't set one at 225 and then also one at 205. So what I'll do in this case, we'll set one at 225. We'll revisit the stock to see if it's, on my buying list, and then we'll move the price alert lower once the 225 price alert goes off. Overall, Netflix is still down 48% in the year. At one point, it was down 72%. So don't be surprised if some of these big tech stocks like Netflix and Meta start bouncing back in a huge way. We've even seen Netflix closer to $700 per share in the past, and it was trending right around $500, $400 per share in the past for a long time. Okay, Netflix just put out their ad feature where they're going to be getting a lot of their subscribers back with a lower cost subscription, but introducing ads to that subscription. We see the market cap is only 147 billion, so there is a lot of room for growth still. The PE ratio is 28, implying that it's not super overvalued right now. So it's a fairly good time to be buying or dollar cost averaging in. But again, I want to buy my average cost to be closer to around $200 per share instead of the $300 per share that it's currently sitting at. Remember, it's still down 50% in the year. Also, another thing to think about for the bullish side is international expansion offers attractive markets for adding subscribers. Netflix has built a sustainable content library that will benefit the firm over the long term, and they keep introducing these new things time and time again. Stranger Things, the most recent one was Wednesday Addams, the Addams Family. It's one of the most watched Netflix shows of all time already, breaking Stranger Things records. So it seems like they are able to reproduce and recreate these international hits time and time again. Netflix internal recommendation software and large subscriber base gives the company an edge when it's deciding which content to acquire in future years also. So it does have an extreme data library compared to some of its competitors. We can see that it is a profitable company, and it is extremely profitable. The last few quarters beat EPS, and they beat EPS in a big way, trending higher and higher towards profitability. But let's jump into their earnings and revenue a little bit deeper. We can see that the PB ratio is 6.9, PS ratio 4.5, forward P is 31. Okay, EPS 10, it's implying it's a little bit more overvalued than something like Meta. However, if we scroll down, we can actually see that the EPS is trending in the wrong direction. The net income is down and up. So in that case, we have to look at a yearly chart, but we can see the extreme growth in net income in the last 5 years. So this is why this stock has been so attractive and been such an explosive stock in the stock market over the last few years, is because since 2017, it's gone from only 630 million in profit or net income all the way to 4.8 billion. That's huge, huge growth. Just from 2020 to 2021, they've seen 80% growth on their net income, and they grow on average around 50% on their net income, which any investor should love to see from their investments, okay? Now, you'll be hard pressed to find another company that's growing net income at at 50%, and their net income's 4.8 billion. For 5 years in a row, they've been growing that 50% also. It's not just like 1 year they've done that. Now, if we go out to the total revenue, we can see on average they've been growing around 20-30% from 11 billion in 2017 all the way to 30 billion. All right. Now, on the quarterly, on their revenue, it's been pretty stagnant, very slow growth on the quarterly, but the yearly is more important to look at anyway on that growth. If we scroll down, we can see the debt to asset ratio is 64%, which is going to be a little bit higher for a company like Netflix because they obviously have a lot of money to spend when they're paying actors, production, editing team, big box office hits that they're putting out. Wednesday Addams, Stranger Things, for example. I think they were spending like 20 million per episode on Stranger Things. Okay, so that's probably why they have a little bit more liabilities than something like Meta, for example. 64% isn't horrible, but we would like to see that under 50% and closer to 30% on the debt to asset ratio. Going back to their net income, even spending all that money on Stranger Things episodes and production, casting, paying Ryan Reynolds, The Rock, and other big A-list actors, you can see that they are still a profitable company and they're turning a great profit. Okay, per quarter, they're profiting around 1.4 billion, which is a great thing to see, especially if they can keep it up. If they can continue to grow their net income higher and higher, continue to grow their total revenue, get those liabilities a little bit lower. I really do think Netflix is an attractive stock for long-term holders. So if we see another big dip on Netflix, I'll definitely be buying in around $225 per share to $175 per share are my price zones that I want to load on Netflix. And the last stock that we'll be talking about on this list is going to be Apple, ticker symbol AAPL. You all know them. You all love them. Trading at $147 per share. They're down a little bit in the last 3 months, only down 5%. They're down 10% on the year with big up and down swings. We've seen them at $135 per share time and time again. In my opinion, they're going to be making a lower low to $135 per share, $125 per share. And in my personal opinion, I think they'll be even revisiting around $115 per share. So I'm going to set some price alerts right around 135. We'll revisit on this video once Apple hits 135. But remember, I want to buy most of my shares around 115 on Apple because I think it's very possible that happens, especially if we see another downturn or another down leg in the stock market. We can see that the PE ratio is 24, implying that it is a better deal right now than Netflix is right now. The market cap is 2.36 trillion, one of the biggest stocks in the whole stock market, top 3, if not top 1. Sometimes it fluctuates between Apple and Microsoft. So, today it might be Apple, next week it might be Microsoft, the biggest company in the world. But there is a lot of drama going on right now with Mr. Elon Musk. He was saying, he was kind of throwing Apple under the bus, saying that there's a 30% fee on basically everything because of the Apple Store, and Apple's taking a 30% tax on every single business that way. So that's obviously part of their business model, and Tim Cook wouldn't want Mr. Elon Musk to attack him. Elon was also saying that Twitter might be taken off the App Store, but Elon actually met with Tim Cook, and Tim Cook actually clarified that he will not be taking Twitter off the App Store. And there was actually concerns about when there was concerns about Twitter being taken off the App Store, Elon Musk was saying that he would actually make a competitor phone to the iPhone, which is very interesting. I don't know if anyone would have bought that just to use Twitter and just to support Elon Musk. A lot of people love their iPhones, and that's why the ecosystem is so strong, is because a lot of people use their iPhones, they use the App Store, they use the iTunes Store, and Apple's getting a 30% cut on every single purchase made on an iPhone. Now, if we pull up Apple's stats, we can see that they have a PB ratio of 46. Holy cow. PS ratio of 6. We also see a forward PE ratio of 23. Okay, the EPS is trending around $2 to $1.50 per share. We can see that their net income quarterly, they're making 20 billion profit per quarter. On the yearly, we can see that it has trended up, but not too much growth on their net income, only growing around 5%, 6% per year. There's some years where it does grow 60%, but that was 2021 when, the anomaly of the pandemic was happening and going on. Okay, but overall we do see the growth from 2018 from 60 billion to 2020, which is 90 billion in total revenue, total net income. So they're profiting 90 billion per year. So if we scroll down, they should have a lot better of a balance sheet if they have so much free cash flow. If they are, we can even see their free cash flow here has been going up a little bit more to 120 billion. Overall, Apple's not too concerned with going out of business. They're such a large company, so they don't mind taking on a little bit more debt right now or liabilities. They're at 85% liabilities to assets. They have 300 billion in liabilities. 300 billion in liabilities. That's more than all of that's almost the size of Meta alone in just their liabilities. So it'll be interesting to dive in and see where these liabilities are. We can see that their total current assets are 130 billion, cash and cash equivalents is 5 billion, cash is 18 billion, short-term investments they have 24 billion. But if we scroll down to the liabilities, and we can see that their long-term debt makes up a lot of it, around 100 billion in long-term debt, which is better to see the long-term debt rather than like current debt, for example. So we might have to make a full video diving into Apple's balance sheet and going over everything to see where their money's going. But overall, I wouldn't be too worried about their balance sheet. I would be more worried about their growth, their net income growth, and their total revenue growth. So we really want to see that total revenue picking up more. We want to see that net income picking up more. They really need to be growing revenue around 20%, 15 to 20% per year. And net income should be growing at least 10 to 20% per year, double digits on that growth. Also, as an investor, these are great things to see. We also want to see strong demand for the iPhone, for iPads, for Macs, for wearables, for iCloud, and everything in between. So I'm excited for the earnings coming up. We have the price alerts set. Once our price alerts go off, we will be doing an update video on Apple, or when their earnings come out, we'll be doing an update video on Apple, whichever comes first. So make sure you have those notifications on so you're in the loop with all the Apple updates. And thank you guys for all the love and support you've been showing on the YouTube and Instagram. Over 180,000 followers now on Instagram, 628 posts. Message me here on Instagram if you want to join my close friends list, if you want to see what I'm buying, when I'm buying, and everything in between. If you want to see the success that students have been having, click on success number 6 on my highlight section of my profile. And you can even skip to some of the newer ones that were happening last week and this week. And we can see lots of people are making money, up 58%, $1,000. AMD put and grabbed a TQQ put when the pullback and caught it on the way down, up 30% in just one day on that account. Okay, and the list goes on and on. We have thousands and thousands of success stories now, over 2,000 total students, and you can read through hundreds and hundreds of success stories just from this year, from 2022. Okay, so this student was up 342%. Wow, good call on the put, up $2,000. Another one up 278%. Meta for the win. This one was up 216%. $1,700. DM me to join, and the list goes on and on. Feel free to take some time out and read these for yourself. You can see, check it out. Thanks, Alec. We can see up 28%, up 115% just on the day. This was 3 days ago, by the way. These are all very recent plays that we have been doing. making money in the stock market. And you can see, thank you for the advice. So if you want to make 2023 your year, start your New Year's resolution early. Learn to become more of a professional, advanced trader in the stock market. And I also have programs developed for the most beginners. So if you don't know anything at all, this program is for you. Just DM me here on Instagram and I'll help you out. I'll shoot you over my website so you can check everything out for yourself. And if it makes sense for you and if it's inside your budget, then let's go ahead and make some money together in the stock market. Other than that, like this video, share with a friend. Thank you guys for the love and support, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.